Neha Vashisht, and today we have Dr. Mukesh Jindal, who is the co-founder at Alpha Capital with us. Thank you so much for joining us on ET Markets live stream, Dr. Jindal.
Thank you, Nia. Thanks for inviting me to this session. It's always pleasure to be here, pleasure talking to you, pleasure talking to the audience.
Well, same here. For the audience joining us today, we are going to dive deeper into the world of microcap index and stocks. So, should we start?
Yeah, absolutely. Absolutely.
So, first of all, let's start with the basics. What is a microcap index and how does it work?
Neha, lately microcap index and the microcap stocks has been in lot in news. And the reason is that Motilal Oswal has recently come out with a microcap index fund. The NFO is running right now. The NFO will run till 30th of this month, and the fund will become live after 5th of July. So it has been a lot in the news. In fact, even HDFC Mutual Fund has also filed for a NFO of microcap index with the SEBI. Hopefully, they will also come very soon. So a lot of lot noise, a lot of information. So yeah, let me take you through this. So
Sure.
before I take you through the microcap world, let's see what's happening in the stock market in the sense how does the whole space looks like and where does the microcap fits in. So today, Neha, you have almost 2,100 stocks listed in the National Stock Exchange. And what has happened is that in 2017, SEBI came out with a paper whereby it categorized the stocks for simplicity. And
Yeah.
what SEBI said is that stocks can be arranged in a descending order by means of market capitalization. And how do we calculate a market capitalization of a stock? It's simple. You multiply the current stock price with the number of available stocks, and it gives you the market caps. The Reliance being the biggest, then you have HDFC and TCS, so it becomes a descending order. Now SEBI said that the first 100 stocks are the large cap, okay, and from 101 to 250 are the mid cap, and anything beyond 250 are small caps. So that's how the SEBI classified it. And you have large cap, mid cap funds, small caps investing all around this, large, mid, and small. Now there's a different definition which is also run by NSE and BSE. Now, as per NSE, they have made various indexes. They have large, mid, small, and they've also made something called Microcap 250 index. So what they
Yeah.
said is, of course, beyond 250 or from 251 to all the balance stocks comes under Microcap. But the 251 to 500 are basically the stocks which will come in the Microcap 250 index fund. So this is the index which they have made. And if you look at these 250 stocks, the market cap of these companies, the maximum or the highest is 11,000 crore and the smallest
Yeah.
is 1,000 crore. So, you have an index fund which will invest in all these stocks based on the weightage, on the basis of market cap in the index. So they will be investing in this space. So that's all about microcap investing.
All right. So, just to understand microcap index a little bit more, how is it different from other indices apart from if we're talking about market capitalization?
Yeah, see, Neha, microcap index is a very special and a very different index. It's not like any other index. I'm personally very excited about it, and it has quite a few difference compared to the other indexes. So let me highlight some of the differences. So one is a market cap, differentiation, which I had explained. If you look at the whole, market cap of the Indian stock market index, it's 3.3 trillion dollars. Now, the large cap, which are the 100 stocks, it has 66% of the total market cap. So, those 100 companies constitute 66%. It's a big daddy and covers
Yeah.
majority or the two-third of the whole market cap. Then you have the mid cap, which has 17%. Then you have the small cap, which has
Okay.
9%, and then you have the other which is 8%, which constitutes the micro cap. And within that 8%, 3% is this micro cap 250 index. So what happens is this micro cap gives you an opportunity to invest at the lower strata of the companies which are smaller and which doesn't covers the broad capitalization. So this is one key difference which it carries. Now, second, what happens is, if we look at the stocks, these micro cap companies are very small and they are not tracked very aggressively. There are institutions which, come out with analyst report who, analyzes these companies for fund managers, portfolio managers. Now, if
Yeah.
we typically look at large cap stocks, on an average, there are 17 institutional, companies which are analyzing these large cap companies.
Last year.
But if you look at the micro cap, there are only average two reports against each company, and basically there are, you won't believe, Neha, there are 43 percentage of the companies of the microcap index which are not even tracked. So, these are companies which are unexplored, has a lot of information which is not available, and of course, it creates an opportunity for the investor. So that's a second key difference. The third key difference is, the composition of the index. Now, see, if you look at the top 500 companies, they are, very heavily weighted on the financial services and the IT, and both these sectors are representative heavily of the Indian economy. But if you look at the other sectors, let's say, industrial manufacturing, or if you look at the chemicals, the representation in the top 500 companies is very small. So for example, industrial manufacturing only constitutes 3% in the Nifty 500, and chemical only constitutes 2%. Now, Mr. Modi ji, our honorable prime minister, is focusing so much on Atmanirbhar. There's so much of manufacturing. Globally, you have China plus one strategies. Companies are diversifying out of China and manufacturing in India. But Nifty 500 is not capturing that opportunity. So what is happening in this microcap index? The industrial manufacturing constitutes 26%, which is a very large number. Chemicals constitute 6%. So, by investing in this index, you get exposure
Yeah.
to companies which you are largely not getting. So I think that's also a very big difference. And of course, you have a, return risk difference. The micro cap, of course, being very high risk and high return. So these are the basic difference about, the micro cap index with your other indexes.
All right. So, as you were talking about returns towards the end, that is something every investor is looking for at the end of the day. So, what about returns? If we talk about returns historically, when it comes to microcap returns and indices and stocks.
So Neha, there is no denying the fact that microcap are high risky and will eventually give high return. But I think it's also important we understand the technicality behind it. That will the higher return historically which has come, will the trend continue? So to get a reflection of that, I'll take you through, a research development which had happened in the year 1992. There were two guys, Farmer and French, and they were both professors in Chicago Booth University in US, and they came out with a milestone research paper in which they said that the stock market is not efficient. What it means is that you can generate higher return by different models, and one of the key models, like in the research paper, they had identified three models. One of the key model was small over the large. What they said is that small indexes, small cap indexes will always give in long term higher return over the large caps. The reason being, they are small, they're not so professionally managed, they're not liquid, they're not so tracked. So, it's a proper research and documented fundamental that when you invest in a small cap or a micro cap companies, you are taking a higher risk and eventually you get a higher return. Now, you asked about what has been the pattern. Like, we had the data since 2005 for this index. Now, if you look at the 10-year return, in the 10-year, you had, the Nifty giving you a return of almost 13%, and the mid cap during the small cap during the same time gave 17% in the last 10 years per annum, and micro cap index gave you 24% return. So clearly, the micro cap gave the highest return in the last 10 years when you compare it with Nifty and small cap. And if you look at even the 15 years, in 15 years, the Nifty and small cap gave 11% per annum, and micro cap gave around 13% per annum. And in fact, what is interesting is if you look at any period, 1 year, 3 year, 5 year, in all the periods, microcap index has been able to beat both small cap and Nifty. So historical return looks good, and I also feel that long term, the returns will be from the microcap higher. But what I want to highlight, Neha, it's very wrong to look at return on a standalone basis. You have to measure at the same breath the risk which a fund manager is taking, or the investment where, what is the risk exposed. Okay, so
Yeah.
let me highlight what is the risk involved in these three indexes we spoke about. Of course, the volatility, see, I have the data with me, historical data. The volatility which is measured by the standard deviation is of course the highest for micro cap, and then small cap, and then Nifty. But a lot of time it doesn't means anything to us. We know it's a highly volatile. According to me, there are two better indicators of measuring the risk or understanding the risk when you invest in any particular fund or index or any particular stock. The first measure is the maximum drawdown. What it means is that in worst case scenario, what is the maximum loss that particular fund or index can go down. So Neha, would you like to make a guess what could be the maximum drawdown in the history in the microcap? Like what could have the loss in the past would have been in this index, maximum loss in a given period,
Uh, in terms of percentage,
percentage?
maybe 20%, probably
Okay.
20,
uh,
or maybe
okay,
between 10 to 20%.
so let me take you back,
Is it
rewind
a
the
big number?
situation to it's a very, very big number. And
Okay.
let me take you back to the 2008, the great financial crisis, GFC.
Yeah.
And during that time the microcap index crashed by 80%.
Oh,
80%.
that's a
So
very
100
huge number.
rupee,
Very huge
that's a
number.
huge number. And I want, everyone in the audience today to digest this number before you invest in this. That in the past, in 2008, it crashed by 80%. By the way, Nifty also crashed by 60% during that time.
60%. Yeah. Yeah. Yeah.
60%. But, it was not just one standalone time. In 2020 also it crashed, during COVID period, it crashed by 70%. So one, the drawdown of the fund can be very high, and
Yeah.
it
Yeah.
can be 70, 80%. That is one. Second big risk factor which needs to be highlighted along with a higher return is, the period during which the index may give you zero return. So can you guess, Neha, the maximum period for which this index has given 0% return? So, for example, let's say if you invest today, what could be the maximum possible period? If you held, it will give you
What
0%
was it?
return.
Probably 5 to 7 years, maybe, or maybe 10 years. Don't tell
Okay,
me it's
so
more than that.
no, you're right over there. It's not so bad. So it's 9 years to answer your question. So the crash which happened in 2008, it only came back to the 2008 level in 2017. So 9 years it did not give any return. So, this is the risk level. Of course, if you personally ask me, I think next 10 years, maybe Nifty will give you 13, 14% kind of return. The small
Yeah.
caps will give you 17, 18. Maybe this gives you 21, 22%. But you also needs to understand the risk, about 80% drawdown and no return for maybe 9 or even 10 years.
Right, right, and it does sound a bit risky though. But I think everyone should do their due diligence whenever investing in the market. But you need some kind of planning, and you can't obviously put all your money into one particular index. So to understand this more, what are the some pros and cons of investing in micro cap index, except for the drawdown and the longer period of no returns?
See, of course, we spoke about the various differences, but there are some advantages and some disadvantages also. The advantages, I think, one big advantage is that you get exposure to sector and stocks which are normally not available. In fact, the whole of the mutual fund industry's assets, 96% of them are invested, in the top 500 companies. So when you are investing any mutual fund or you pick up the any portfolio, it's normally large cap heavy weight. So, this index consciously gives you exposure to them. And with China plus one strategy and with our Honorable Prime Minister focusing on Atmanirbhar manufacturing and all, I think this sector gives you that advantage. Second big advantage is, see, we have all kind of investors. I highlighted that, of course, there is a drawdown and all, but the investors who are very aggressive, who are knowledgeable, they are very excited. It's an opportunity for them. Someone has a longer period, then you could get a much higher return. So I think this is something, some of the pros about which I'm personally very excited. I think this is one of a great investment for someone who is knowledgeable and who understands the space. So these are the pros. Now, if we talk about the cons, of course, it has a higher risk. But one thing what has happened is, this is an index fund. And a lot of time, the small cap indexes or the micro cap indexes are not very efficiently made because, the index captures all of the 250 companies. So, you also have a lot of bad companies in the index. And even if the fund manager knows that these are bad companies, but he has to include those companies because it's he's investing in the index, and the probability of bad companies are very high in the micro cap space. I would have personally liked it, if there would have been an active fund, and because active fund manager would have been a better situation to select better stocks and deliver higher return with lower risk. And we have seen that happening in the small cap space. If you look at the small caps funds and compare with the returns, the small cap fund managers have been able to generate alpha of 3-4%, and vis-a-vis the benchmark. And also the risk management becomes important, because when I said the downside of this index, the drawdown is around 80%. Maybe with the active fund managers, when the valuation is high, the fund manager may shift the portfolio to the stocks where the volatility could be less. So I think this is one big disadvantage, but having said that, overall the package looks good.
Right. So, lastly, which micro cap stocks or indices would you suggest that have performed well in the last few years, or maybe just a few names in the market that investors can look at?
So Neha, in fact, I'm not allowed by SEBI to advise on particular stocks. We are registered investment advisor, and we're not allowed to name the company names. But having said that, if you pick up, let's say, the index of microcap stock. Now, if you look at some of the names which are the top 10 companies or 15 top 20 companies, you'll see that there are some great names. You have Sirma SGS, which is into manufacturing of electric component. They have done phenomenally well. There is a Procter and Gamble Health. There's Ircon, Ujjivan. You have Ahluwalia Contractor, World Time Transformation. These are some fantastic companies where the promoters are great. And seeing these micro cap stocks, these are majorly promoter driven. So great promoters, doing phenomenal work. And if someone tries to focus on them, he or she can definitely identify great stocks. And if it's difficult for them, I think the most easiest and simplest way is to invest in a low cost micro cap index fund, because it will give them enough exposure. And if they hold on to it, most probably they'll make a good return.
Right. So, before we conclude, I want to take some questions from the audience. Uh, Something relevant to our topic of the day, but we'll just see what questions we have. Um, so, the first question is by Rihanna. She's asking, which are the best micro cap stocks to start with? I think you have already answered a few samples for that. The second one is, Rohan is asking, is investing in microcap safe?
So this is a very important question, Neha. And for Rohan, I have only two questions. Rohan, for you. One, there are two litmus tests, and Rohan, this is for everyone, for anyone who is considering investing in microcap funds. One, are you comfortable with 80% loss in this particular fund? Okay, if you are comfortable, then it's fine. Of course, this loss will be short term. If you hold on, it will bounce back. It's not that it's a permanent loss, but you may see a 80% drawdown. Secondly, is your time horizon more than 10 years plus? Because there could be a possibility that you may have to invest in this fund for 10-year plus because the fund may not give any return. So if your time horizon is 10-year plus, and if you're comfortable with very high volatility, then it should be considered for investment. And Neha, for the benefit of everyone in the audience, I want to highlight few things by which this can be made a safe investment. See, a product can be risky, but I think if done few things, the risk can be significantly reduced. One, diversify. Don't put too much of your money, which Neha you also highlighted. Diversify your money into different baskets. Don't put a lot of money over this space, maybe 5%, and if you're very aggressive, you can go up to 10%, so that even if this particular index not doing well, you have other things doing well. So diversify, that is one. Second, what is also important is your time horizon should be long, which we discussed. Put only if it's for 10 years, which also means, if you have your kids' education and all that, which is going to come up in 15, 20 years, you can consider doing that. Third, build exposure in this fund through SIP. So in systematic investment plan, you'll be buying at different dates. What will happen is that your purchase price will get averaged out, which is very important in this category. So SIP is a fantastic way. In fact, we did a back testing of the data of this. SIP helped investors to not only enhance return most of the time, but also significantly reduce the drawdown, which becomes very important. Last, Neha, this fund should be considered only for very aggressive investors. It's a no for conservative or moderate investor. If you're a conservative moderate investor, stay away. Small caps are fine, but you're aggressive, you understand the risk, then this can be a safe way of making a lot of money in long term.
All right. So we're going to take one or two more questions. Gautam is asking your views on ICICI Pru and Paras Defense. It's a stock question, but if you want to take it, please let me know.
So I think he's asking about the defense fund.
Paras Defense and ICICI Pru. It's a particular
No,
stock question, not
yeah, I think I'll skip that because SEBI doesn't allow us to do
no
on
worries.
individual stocks.
Okay. So we're going to take another question. It's by Pranjan. He's asking, will we see regular funds appear in microcap select sector?
Yeah,
Regular
so in
funds.
fact, Neha, I think I missed on highlighting one of the opportunity about this space or this investment, which has come through this question. See, if you remember, Neha, way back in 1992, the stock market was not so matured, and the FIs started investing in stock markets. Then the market got matured, and if you remember the rally of 2002 to 2008, the Sensex went from 3,000 to 21,000 7 times in 5 6 years. You had a lot of mutual funds money coming in. Mutual funds became popular. FIs invested. So the whole Indian stock market got institutionalized. So what is happening is, Neha, is that currently microcap, you have very less institutional money in this space. Like I told, only 4% of the mutual fund industry is over here. Now, with this index fund, Microcap Index Fund, which has come through Motilal and HDFC's filing, I expect many more, regular funds coming in, passive funds and active funds also. So more and more money will be flowing in this space. And what happens, Neha, that wherever the money comes in, wherever the institutional money comes in, the return goes up. So I think we are in a very early stage, and the fundamentals look good, but liquidity, which will come through various new funds, which will come, and I'm very sure the funds, there will be many more funds which will come in because it has created a great hype and makes a lot of sense. In fact, I was personally looking for this kind of investment, and so yes, there will be more funds, and I think that creates a fantastic opportunity in this space.
All right. So we'll just take one last question. One of our audience members is asking, will you invest if you see a good opportunity in small or micro cap?
So it's a very important and interesting question. And, I also want to highlight one more thing. In fact, I was myself surprised. When you look at a lot of small cap funds, they themselves invest in micro cap stocks. So, the example, if we talk about DSP small cap, that has almost 42% of the money invested in the micro cap funds. The Nippon small cap and other funds also have good money in the micro cap stocks. But having said that, see, these are two different categories. And my advice to the investor will be look at the valuations of the indexes, look at the P ratios, and because at some point of time, the small cap index may be looking cheaper. Some point of time, micro cap may be looking cheaper. So wherever you see the valuation level gap, you should invest more of that. In fact, we see a lot of variations between Nifty, mid cap, small cap valuation. In fact, like right now, small cap valuations are looking good. Mid caps are looking expensive. So we are putting more of our clients' money in the small cap. So similarly, a micro cap, new space opens up. And for simple investors, they can look at the P ratio. For example, the current P ratio micro cap is around 22, whereby the long-term average is 20. So it's slightly expensive, and it's the valuation is similar to the small cap space, but it's important to watch. And whenever the valuation is cheap, invest. When it becomes a bubble, book profit.
All right. Well, with that, we have reached the end of our segment today. Thank you so much, Dr. Jindal, for joining us on ET Markets live stream and answering all the questions and making us all understand microcap index and sectors and everything related to microcap stocks really well.
Thank you, Neha. It was a pleasure talking to you. Thanks to the audience for listening to me. I hope you enjoy investing in microcap. Invest carefully and make